All right, everyone. So we thought we'd jump on the podcast bandwagon here a little bit. I'm Josh Smith at All Properties Group. I sell homes. With us today, we've got Dan Brown from Loan Market. We do a lot of work together. Dan assists us with helping get clients in a position where they can purchase both before going to contract, after. We just thought we'd get together and have a bit of a chat about a few issues that we discuss kind of behind the scenes a little bit. And we'd been talking about having a catch up, and we said, you know what, let's just film it and go from there. So
yeah, thanks for having me. I think from our side, we tend to talk a lot. Well, we tend to talk shop a lot with what sort of ways we can assist clients. And so moving forward with this, it's a good idea to, I guess, a way to be able to show outwardly what we can do to assist with the process with any sort of buyer, whether it be first home buyer, upgrade or whatever, and what ways we can add value to see, that could be me. What could I do here? So I think there's a great opportunity there. So I guess from my side of things, let's start with yourself, Josh. So Josh Smith sells homes. He's not Josh Smith pretending to sell homes while doing nothing on social media. So you're one of the good ones.
Yes.
Talk to me through about what you do and how long you've been in business for.
So mine's a little bit of a different scenario. Obviously, I've spent the last few years working in conjunction with Chris Gilmore, who obviously owns All Properties Group. Key part of Chris's team through the winning most properties sold each year for 3 years in a row. I've now gotten to a point where I'm sort of branching, back out on my own again, so it's sort of a little bit like coming back to ground zero, if you like. But whereas I've been working in a market with Chris where a lot of the stuff that we've been doing has been acreage properties, coming back into an area with probably a lot more focus on first home buyers and some of those things. And that's where I've been thinking, like to produce some content that I've got readily available to be able to put out to, all buyers, but specifically some first home buyer stuff that we can assist people with understanding what they need to do.
So what sort of patch are you specifically looking to focus on at the moment this financial year?
So like Logan Reserve is a focus area for me, but equally, look, I've just put another one under contract on the weekend in Mount Warren Park, where that's the second one that I've done in Mount Warren Park recently. So
nice.
Even though as an agent within the company, we have focus areas, anywhere throughout Logan, happy to work with. So
it's one of those things where that like with us and what we do with our local community patch that we've got, like we work within the Logan region. A lot of it is closer to where we live, around Rochelle, South Springwood sort of region, where we sponsor a lot of schools and sports and things like that. A lot of that's the goodwill tends to travel through the greater region as well. So we have a lot of customers specifically around, I guess, the 4118 region, as well as out Logan Reserve and Greenbank sort of way as well, off the back of what we've done with obviously customers upgrading, side grading, friends and family, that sort of stuff. So we are quite proud to have that sort of reach within that greater region, and looking forward to ways to, I guess, work stronger in that too. So so you've had that experience under Chris like the last few years to see how he ticks and all that sort of stuff, and basically, I guess, picking up like the best pointers that you possibly could, considering his experience. What have you found as being the most telling things that you've learned from him in the last couple of years?
Oh, so many things. But I guess, just the period that we've come through in the post-COVID sort of scenario is, it's very much been a imbalance in supply and demand scenario, which is largely what's driven price growth and everything like that. Everyone, I think, across the board would agree, limited, I hate the term stock. Limited homes available for sale. And what that ultimately equates to in a lot of scenarios is competition between buyers. As agents, we love competition between buyers because obviously, anytime you can get any version of a bidding war is a good thing for the seller that we represent. But along the way, you get to see a lot of scenarios where multiple offers, what lends a seller to accept one offer versus another, and that question mark of trying to provide some guidance to buyers of any description, including first home buyers, of how can they put themselves in a better scenario to be able to be, the offer that gets selected when you're competing against other buyers.
Understood. So I guess from your side of things, you've got, you're working for the seller, but at the same time, you've got all the signs, you've got all the experience to know I guess, what has worked in the past, and obviously in the recent past sometimes too, with different trends with what sellers would take in some circumstances. So we have a couple of points to get to that a little bit later when it comes to things like first home buyers and bridging and things like that. But for now, I'm also just thinking about that's great, because obviously you don't want to be that real estate agent who the sellers love and buyers hate, because I guess when the buyers do look to sell, they won't. But the sellers will love you. The buyers will like, oh man.
A lot of agents have this seller only sort of a mentality. I mean, I've seen plenty of agents out there that quite frankly almost treat buyers with contempt. You hear people, things said like, oh, they're just the necessary evil, but last time I checked, every deal has a buyer as well as a seller, and it's by pure definition, to pull any deal together, it has to be something that both a buyer and a seller can agree upon in order to get a contract done, So maybe my approach with buyers is a little different to some others, but, I prefer to try and assist as much as possible.
Well, it's one of those things, right? Because it's a bit short-sighted just to work for the seller in some instances, because you've got a longer-term approach, because obviously, buyers are sellers eventually soon, right? So, and they've also got their own networks of people they can recommend along the way. So from that side of things, it's a great outcome to have that approach to buyers and sellers in that sort of supporting respect, and having, I guess that's the thing with the right team and people that you can recommend behind you to assist during that buy and sell process, because there'll always be another way to go. What's the average? The home loan age in Australia is normally that 3.5 year mark, 3.5 years. So there's always some sort of...
How long a mortgage goes for?
Before they may need to have an event, like a sale or refinance or some sort of restructure needs to occur. So when it comes to property, it'd be very similar to that. All buys a house and holds it for 40 years, right? So it's one of those...
Very few.
So there's always you got to have that long-term approach. And I feel that, you guys being, obviously being in business for quite some time now, with yourself being experienced as well, we've been, I guess ourselves, I've seen a lot. We've been lending for 20 years and we've got another 20 years to go. We're not going anywhere. So it's one of those things where you got to play that slow game where you've got to do the right thing by everybody, and it does come around.
And just the whole notion of coming to work and at the end of the day knowing that you've done the right thing by people, and look, a buyer that you're talking to today that might be the buyer that's missed out on this property, there's every possibility that they could be the ideal buyer for the next property that we have come to market next week as well. So, yes, we work for the seller, but, we've also got to, treat buyers right along the way, because,
the beauty in what we do with ourselves with Loan Mark is being independent from an office, working out of our own office. We get to pick and choose who we want to work with as the people we can trust, right? So I guess with All Properties Group as a whole, great people. We've got points of contact if anybody needs any help with things like conveyancing, building and pest, lawyer, any sort of other bits and bobs. So, and that's a beauty in that sort of ecosystem, that you can choose the trusted networks instead of them being filtered away around places that they don't necessarily know or like, or they're being told to go that way. So to me, from my side, I do trust the team here and what you guys do, because I find great value in the way that you've been taught and the way that the team works for the greater good, really. It's not hard to be a good person as well as have a business at the same time. So I guess from my side of things, what's your cross-section of upgraders, first home buyers and investors?
It's a pretty decent sort of a mix. We have a little bit of all of it, again, because a lot of the way that we go about things, it can be across multiple suburbs and multiple locations. We have a little bit of all of it, and it can be that obviously we can deal with a first home buyer today that buys a property, and it can be not that long down the line that they're ready to move on to the next step, and all of a sudden you got the same person that's had the first home buyer experience, and now, hey, in the blink of an eyelid, sometimes now they're ready to be an upgrader. So,
great.
Have a little bit of all of it.
Yeah, that's right. So I guess from our side of things as well, we do have our main core customer is either a first home buyer or mums and dads looking for that upgrade. A lot of customers as well recently coming in for maybe their first or second investment property. So nothing too we do take, in terms of high net worth customers as well. We've got a team that can support all types, being a team of 5, but for the most part, about, just regular people needing a solution, basically.
Yeah.
And the beauty in what we do as well is we do have a solution from up to 60 banks instead of just going to one bank. So if somebody has a pre-approval, that's great. You've got something done. Let's now shop for your rate and see what sort of better deals.
Let's talk about that, because I had I think it was one of I can't remember, there's some that I referred to you last week who'd sort of said, I've been and seen my bank. And I guess that talk a little bit about really why a broker versus going to your bank. That's probably the number one.
Well, I guess reverse bank is almost obsolete now, because I guess in terms of market share, the broker network has almost just over 80% of all lending market at the moment. So I guess without being rude to the branch network, and they know this as well, obviously they're trying to be a little bit more, I guess, a little bit faster with the process, a little bit ironed out with their speed to service, because they know that a broker on the other side of things can offer 20 times more things than what they can do on their exact scenario. So I've had many situations in the past where a customer goes to their regular bank they've been with for 30 years and they get knocked back just because a part of that customer's employment type or how many kids they've got or a certain type of way.
I'm a tradie who's self-employed, and the bank that I'm with is not real big on
that's right.
on self-employed people lending.
Yeah, so there's different ways that a bank can just say no or not as much, when there's plenty of other banks that would be able to do the same or offer more based on that too. And that's the thing too, we've got all these different funnels that customers tend to get filtered into based on how many different niches we might need to fit them into. And off the back of that, it's by the way, I need to do this too. So we're constantly just figuring out and researching to get the customers the exact right answer they need. The difference between the banks and the brokers as well is we do have something called best interest duty, where we have to, hand on heart, literally spell out by notes and by reasoning exactly how we got to that answer. So whereas if you go into, big yellow bank over here or a big red bank over here, they don't have to do that. They say, hey, you want fixed or variable? And see if they can get it approved, right? So with us, we've got all these different solutions with all these different banks where we get all paid the same. That's another issue where we, some people say, you get paid, you only send them to who you get paid most with. At the end of the day, we're trying to get all the answers correct for you. And it does take a bit of research to get there. But here's the best options based on your exact scenario. And these are all the notes as to why, because we've done that hard work for you to figure it out. So
I remember that at one of our sales team meetings last year, I think it was, that you came along and you threw out a statistic that you'd been through and done an analysis. I'll test my memory here. I think that you said that you sort of did a dummy scenario where it was dual income, both of them making about $80,000 a year.
Yeah.
I think you might have said that maybe there was 2 kids or something like that.
Yep.
And you said something like, across the panel of lenders that you worked with, when you inputted that scenario from the top to the bottom end, I think you said it was something like $100,000 or $150,000. The difference on how much that scenario could lend.
There's such a wide range as to somebody's borrowing power could be, even on regular employment incomes, how different banks factor kids' expenses and their own living expenses or any sort of credit card or not. It's such a wide, most of the banks at the moment have what's considered a assessment rate or affordability rate, where whatever their current interest rate is, they assess 3% above that to be able to figure out what someone's affordability is. Now, there are some lenders who are able to go 2% above that as well. And so off the back of that, obviously not the majors, but you've got that extra level of affordability with some sort of banks. But then if you're self-employed, or if you've got overtime, or if you've got casual income, or if you've got rental income, different banks shade all that stuff differently. So that's where I think I did another assessment on Friday with my socials, where I just had a customer who wanted to toggle around their borrowing power based on reducing their 12 grand credit card to 6 or 0. And that difference in between 12 and 0 for a credit card was 75 grand.
Yeah.
And that particular customer was like, well, I never use it. Why do we have to assess it that way? And
because you could go on a shopping spree
because that limit is available at any time. And the bank considers that. But if you don't consider it, let's get rid of it and let's do some numbers to figure out what you'd be better off with or without it.
Yeah.
And that's a part of what we do. We try and find those tailored solutions based on, hey, if you do reduce your debt to this, your HEX is only 3 grand. If you just pay that off with some of your savings, what sort of borrowing power would you have on this scenario if you just reduced the credit card or paid it out? There's so many answers to the question how much you can borrow instead of just like a bank plugging some numbers in and away you go.
Yep.
So that's a part of our research and I guess our figuring out with our notes as to what sort of options they've got. So we spend a lot of time doing that and tearing our hair out so customers don't have to. Plenty of answers to the same question, what they can do.
Okay, so let's break it down to its simplest form then. So if let's in this scenario, let's imagine that we're talking to someone who's first home buyer, never been through the process before. If they say, I want to go and talk to a broker, they come and they speak with you in its simplest form. What's the process? What information do you need from them? What are the most basic steps, and approximately what's the time frame needed to go through that? Like, so if someone says, I want to go out and start looking at houses next weekend, how much time, and I want to be in a position where when I go looking at houses, if I find something I love, that I've got maybe not a pre-approval, but I know where I stand, so I can confidently be in a position that I can put an offer on something with some real understanding of my position. How long's that process take, and what's its basic steps?
I've got a good one with this for you, actually, because I had a customer on Friday, and I make mention to customers all the time, right? So like when I'm going through an initial appointment, I like to build out some brokers and some interstate people and stuff like that with some sort of Zoom meetings. I prefer to meet in person for the first meeting if I can, if the customers can as well. And in this instance on Friday, I met with this guy in person at a coffee shop and basically ran through what's called a fact find, which is basically a bit of a snapshot of your entire scenario with the address, job history, what you own versus what you owe. And then figure out exactly what you had in mind in terms of borrowing power, area, that sort of stuff. So we're trying to just piece together for my own notes for them as well as the analysing off the back of what their needs are, like if they want some extra savings, a buffer, if they've got big deposit, if they want to keep some of it. And I tell anybody who listens at every appointment with that, I say, look, after today, because I knew he was looking on the weekend, after today, I've got two types of customers I deal with. One type, you're going to take this away. I'm sending you a checklist of everything that we need. You're going to go and analyse that over the next week or so and get everything through to me that you need. And then I can get, once I get everything from them, then I can give them some answers pretty quick as to what sort of recommendations we can make, and then set some e-signs away to get that lodgement for a pre-approval. On the other side, second side of customer, I see them that day, they'll make an offer the next day and say, hey, by the way, I've got a contract ready to go. We need to panic. And so after the weekend, that guy was that guy. And I made light of that situation because he did mention to me, I'm sorry to be that guy, but I'm that guy. And so I
jumped from person A to person B over the weekend.
So that's where we can work as well with both. I guess being not just a single operator here, we've been in business for 7 years, I've been lending for 20. So we've got a team of 5. We've got a pretty strong production line of exactly what we need from customers at any given time to get moving at a pinch if we need to. There's a signed contract on the line right now. We already know where they're going to go, and that's off conversations over the weekend because we do chat on the weekend, unlike banks as well. So I guess the only real difference between, to me, the process from, like I said, with gathering that intel with the fact find for a customer, sending a checklist of stuff that we need to make it very clear as to what information the banks will be looking for. So then once we do get that stuff back, if there's anything adverse with credit and their accounts, we can attack that before we do get to lodging anything away. In our best interest and the customer's best interest as well, we work to make sure we lodge once and lodge right. We don't want to send stuff away and see if it sticks. We're getting all the recommendations back. We have conversations with the bank's representatives as well, just to make sure, hey, not sure about this one, what do you think? And get all the answers we can. Because we don't play games in terms of stuffing around in time and effort with us, because we've got obviously the amount of lodgements that we do. We want to make sure we get everybody right first time. But with that particular customer, they literally have a live contract right now. We're going ahead. So I guess that's where.
And how long did that take with that?
The conversation with the customer, normally about between half an hour, 45 minutes. So from there, 45 minutes, we send a checklist out. If anybody has any questions with those documents and things like that, we're happy to help with that as well. We've got our ladies in the back office as well who do send out reminders saying, hey, by the way, we haven't got this yet. So it does definitely help with the flow of getting everything in as soon as we can to make sure we can give them the right tailored answers. I guess
but in its simplest form, and I don't know if you know this or not, but I actually did 3 years in car finance along the way. So certainly some solid understanding of that. So the main things that we're going to be looking for is pay slips to show current income levels and year-to-date income. If there is current rent a variable that the bank likes the
not necessarily
they're spending right now?
Current rent can work a little bit when it comes to showing genuine savings, but not so much when it comes to how much they're actually saving, because they still need to have some sort of amount that they're putting down as a deposit. So I guess the main key metrics would be building out on its simplest level, what money's coming in versus what money's going out. And
so expenses, day-to-day living expenses.
And then looking at what sort of savings they've got over the top of that and what they've built up to put towards that for their property.
Yeah, okay.
So that's, I guess, on the simplest level. And also just making sure there's nothing messy on the, I guess, credit report and stuff like that, which we do find sometimes people don't realise are there. So that's when we can try and work on, like, there's plenty of banks outside the regular big fours who can look at things that are adverse depending on circumstance and find the right tailored suit for them as well.
Yeah, right.
Yeah.
Gotcha. All right, let's switch things a little bit here and talk about, first homeowners, the grants, and there's a lot of talk about that, and I do certainly come across people who maybe have a bit of an understanding, not absolute clarity. Again, keeping it in its simplest forms. What are the deals and assistance that are available to first homeowners?
First home buyers at the moment, you've got the first home guarantee, which is still that government scheme where the cap is $700K on that, but gets somebody in the market for their first home up to $700, where you only need 5% deposit. As a first home buyer or somebody coming back to market after not being in the market for the last 10 years, and also if you're a single parent, you can get into the market with 2% deposit. So that's where you don't...
So that's a government-backed...
Government-backed scheme. Basically what happens with that is, if, for example, 700 grand, 5%, you need 35 grand to get in there, right? So if you went to a bank normally, you've got that 35 grand deposit, but for a 700 grand property, you may also need to have like lender's mortgage insurance, which is costs of any loan that's you've got less than 20% deposit for, they're going to get you for lender's mortgage insurance. And in the instance of a loan...
You don't need that in cash though, do you? That typically gets built into the loan.
It gets charged to the loan. So the maximum you can borrow is 95% against the value of the property. But what happens with that is you'll need 35 grand as your deposit, but you'll also need another 25 to cover whatever the mortgage insurance costs would be. So all up, instead of 35 grand, you need 60. So with the government scheme, you don't need to worry about that lender's mortgage insurance because you have that guaranteed placement. Now, the way that the stamp duty also works, up to 700 grand in Queensland, where there's a complete exemption for stamp duties up to 700 grand. Between 700 and 800, it does taper up. It's quite aggressive though after 750, where it does get close to where the regular owner occupiers are, and then it filters out completely at 800. So
this is something that we talked about before we started filming, was that's an area where I certainly have seen people that think that it's absolutely at 700,000 it's done, and that's not the case. Whereas its maximum benefit is up to 700, but there is still, as you say, it tapers off. But there is benefit.
Stamp duty is a complete waiver up to 700. But the government scheme is capped hard at 700 there. So like if they are reliant on that first home government scheme, that's where the cap is. And I guess I tell anyone who listens with that stuff too, like, just get into the market. You can't control where the market's going. You can amortize your debt and pay off an asset over time. So like I've seen the last 3 years alone, the answer to the question, what you can get for 700 grand has changed so much, right? So like even the last 3 years ago, I mean, buy a house for 700 grand at Rochester South, and now you got to go all the way to Eden's Landing or further just to be able to find something at 700 grand. So it's changed so much because of that shift happening. So it does boost up the rest of the market because obviously everybody's trying to buy in at that price point. Everything else is going up above it too. So that's where, like, the sooner you can get into something, you could always have that benefit over time by paying off an asset and building your wealth that way.
I mean, look, I've always, and I guess you always work off of what your own experiences are. I mean, and that's like, I will sort of say to everyone that's out there, because it's what I did along the way. Start with a townhouse. They're more affordable. The amount of people along the way that if they had bought a townhouse 4 years ago would have been in there, would have had huge growth on that townhouse, and they can now make the move onto the next property, carry the equity that they've got from that property into the next one. In a lot of cases, that can equate to being more than 20% deposit because of your equity. You avoid that mortgage insurance. There's a lot of benefit. So just get started.
Equity is always outgrown savings, right? So when you get to the point where you might be even thinking you're close-ish to getting into a place, don't try and find something that ticks all the boxes. Like, I have a lot of single applicants who buy units or townhouses in areas that they like just to get into the market, because like obviously buying a house for like a single person is just too hard. So getting into something is better than trying to save and try and beat that rising
never
price.
Catch up.
It's tough, man. Like, I see so many people who get caught in that spot where, we'll just wait another year, and then they just get priced out. So like, I try and give that advice as much as possible. Yeah.
But buy this over here and let it be going up in value while you're waiting to get into the dream home. You know, sometimes you're absolutely better off for it to be the second or third move rather than along the way doing
it. Steps on the ladder. So it's one of those things that, especially for first home buyers, like just finding something to make sure they get a start, and then they could always make some moves later. Renovations, things like that. There's always more things that can happen.
Yep, absolutely. All right. So I guess the other thing that I wanted to talk to you about when we had to get together last week that we touched on, bridging finance.
Yep, bridging finance, fantastic.
Let's talk about bridging finance.
Bridging finance has been interesting me because I know we've had so many in the last month or two. I think I mentioned we had a PB of personal best of lodgements last month, and 15 of them were bridging loans. So it's one of those things where it's turning to turn the corner to be more appealing for people. And there are a couple of points I did make previously about this, and I make it now, that bridging at the moment, considering the equity spike everybody's had with the existing properties that they've held the last couple of years, it's quite unique where in the past banks have been a little bit adverse to bridging because there wasn't enough equity to be able to hold. So the way the bridging works is that typically you got property one here, and the bank will enable you to be able to lend the entirety of the cost for property number two that you want to move into, and then allow you the time up to 12 months to sell that previous property you've got. Now, the way that it's worked in the past is if you're leveraged pretty high with that property to begin with, there wouldn't be enough equity for you to be able to get that money out for that what they call the peak debt, where you're holding both properties at the same time, and both loan and the bridging loan and your regular loan at the same time. Whereas now, the way the property prices have been going up, they tend to find that peak debt position is still well and truly under that amount they like, where it bids 80% of the value of the properties, right? Yeah. So they want to make sure that that peak debt position is still conservative in their mind. But with the way the property values have gone, it's been great for them to go, well, it's an opportunity for a lot of buyers to get in when they think that wasn't available before. And like their misconception, I think you mentioned before, was the fact that bridging loans are quite expensive. The only downside to bridging in terms of expense is that like some banks do have a higher level of interest on it, some don't necessarily. It's more so how long you're going to hold the property for. Because like, as you got to remember,
because the expense is in having both, that you own both properties and you're making payments on both, more so than it being...
Correct. So there is a bridging term where you're going to be paying interest on that peak debt which time you do sell. So the longer you hold that property, the more interest you'll be subjected to. Yeah. And some banks do lend for that. Some ask you to have some extra money sitting there as a buffer for yourself. So again, depending on the bank's circumstance as to which lender we can filter you to, but there's plenty of options with bridging now that it wasn't before.
Yeah.
And so the main keys here and takeaways is that even if you are downsizing as a retiree or something like that, there are options available to you.
Yeah.
So a lot of people, majority of customers with bridging with myself is looking for that upgrade. They've got the equity here. They want to put it here. They don't want to sell at the same time because like buying and selling and moving a young family out and in is so difficult to do.
Yeah.
But they don't want to sell without knowing they've got a place to buy.
So again, break it down to its simplest form.
Yep.
Bridging finance is a solution, whereas instead of right now, for example, that someone says, okay, I've got the home that I'm living in currently that I own, that I have a mortgage on, and I go find the next home that I like, and I say, I'm going to go and put an offer on that subject to the sale of my current home, which means that they end up going to contract in a position where they have a certain amount of time to be able to then go and sell their current home. But in a lot of cases, to most cases, they then end up having to try and time both sales so they both settle on the same day. And you get to a point where you literally have the removalist truck turning up to your current home, loading all your furniture up in the morning, sitting on the side of the road, waiting for you for the next house to settle, and try and pull that whole scenario together.
Yeah.
And from the perspective of the person selling the home in question, you're putting an offer forwards where it's not guaranteed, it's subject to you selling another property.
Yeah.
And what we find in a lot of cases is, from a seller's perspective, if they've got 3 offers, 2 are straightforward, just subject to finance offers, versus a subject to sale offer, in a lot of cases, you can end up having to offer a higher amount for the seller to get to the point where they go, well, this offers 20, 30, 40, whatever $1,000 higher. I'm going to go with that one. So in a lot of cases, it ends up costing you more anyway to go that route.
So I've heard of that before, where it makes you have to make the offer look more appealing, because subject to sale is very open-ended, right? They don't know exactly when the house is going to sell.
Absolutely. Or if it will sell.
Correct. So in this sort of market, you've got a situation where, a lot of starter homes are selling pretty quick, but you never know. And also they may hold tight on what they want to sell for as well. So having something subject to sell in a contract is an extra, a perceived burden by the seller. And so that's where you may have to offer a lot more to get in. But in taking bridging finance, that clause is not required, because on its simplest terms, like you said, buy first, move in, sell later.
Yep.
So you don't have to worry about having that clause of subject to sale.
Yep.
Now, selling within 12 months, a lot of my customers tend to get their ducks in a row, where as soon as they know their house for their purchase is unconditional or about to settle, they're getting photos on their current place already. So the turnaround time you'd be looking at, it would be a few weeks to a month even. So it's not a bad, and that gives you enough time as well to maybe jazz their place up, stage it, get those little tidy bits and pieces done, instead of having to do that while you're on the way out same day into the new place, right? So it mitigates the nightmare, putting it nicely. I could say a lot more about it, of that simultaneous situation.
Yeah.
So there's a lot more that it does assist. I've seen some people who can quickly just jump in, get a light coat of paint on things, and just tie it up before it's staged, ready to go, sold within a month afterwards. So it's a way to make your offer look the best as possible can, and like you said, bridging has that misconception of cost, but when you look at it from the bigger scheme of things, where you might have to overcome that subject to sale by a bigger offer, if you can sell
one offsets against the other, and often it could be less.
It may, interest on a month's for peak debt may only be a few thousand in comparison. So it's one of those things, for the convenience sake, having that equity there, taking that to your advantage, may be a better out for you.
Yeah, absolutely. And again, it's about options for people, and that's bridging finance has for a long time had this stigma attached to it that it's almost unrealistically expensive. And I think maybe the same as a lot of other things, that when you actually dig into it, that you look at it and go, well, actually, if you approach it in this way, it's actually not that expensive compared with the alternatives. It's always compared with the alternatives. It's not just what the thing is.
So it's a solution-based approach, and it's not too... It did have that misconception a little while ago, when I'd say 8-10 years ago even, when the banks were playing in the space of charging mortgage insurance on peak debt, for example, as well. So they're enabling you to borrow more than 80% of the value of the properties combined for that peak debt, whereas now the banks are out of the space of mortgage insurance for bridging finance, because they consider it too risk heavy. So in this market where you've got the equity to do it anyway, your peak debt will be under that 80% figure, but 80%, the value of the loans compared to the value of the property is in a percentage figure, right? Yeah. So when you're under that 80% of the total value of the property is as a peak figure, that's fantastic.
Yeah. I mean, and that's even just on that point on its own, I think that well, you tell me, would it be fair to say that compared with even historically, the price growth, the value growth that we've had in the last few years post-COVID, there's a lot more people in a position where they've actually got a lot more equity than maybe historically people would have at any given time, and that gives them more options and more flexibility in the way that they can go about things, whether it be to make a move to another property, even to leverage the equity that they've got to go and maybe purchase that first investment property that maybe people traditionally haven't had.
Well, I guess in the market at the moment, it's like Southeast Queensland typically just truds along, right? Like in the past, we've had growth of 3%, 4%, 5%. During the times that Sydney and Melbourne went back 25%, 30% at some points, we went -1%. So it's one of those things, I guess, especially Southeast Queensland, we're very insulated with infrastructure and growth and interstate and international migration. And that hasn't even come back to its full potential since COVID yet. So I guess in the last couple of years with 35% growth in capital growth in property over the last two plus years, it's been a fantastic time to actually look at options like this that weren't on the table before. Yeah,
well, I mean, that's for people that have owned a property, say, from pre-COVID, across the board, up 100%.
Yeah.
That's a lot. That's a lot of equity to give you that flexibility to move into, make a transition to a different property.
Yeah. Well, that's the thing too. Not just for bridging. Like I've had customers from 18 months, 2 years ago, who come back to me saying, hey, I want to get my place revalued to see what we're looking at equity-wise here, because they bought something with one of those government schemes with like a 5% deposit, but those rates aren't best of market.
Yes.
So I guess even like a year on, 18 months on now, we get an upfront valuation cost at no cost to just check the position and say, hey, actually, you can get a position now where you've got a equity position of this now. There are better deals available. Let's have a look at it for you. So even anything from the last couple of years from anybody looking to lend, whether it be bridging or not, there's so much opportunity there based on the back of every single, I guess, improvement to your equity position does help your interest rate as well.
Yeah.
So there's a lot of opportunity there for people.
And I suppose, as is always the case for most people that might be watching, the first step in any of that process, talk to an agent like myself. It's what we do every day of the week. Going out and meet with people, do an appraisal on a property, give people a bit of an idea of what their property could be worth in the current market versus what they want it. That will give them an idea of, the sort of equity that they've got. They can do that in conjunction with yourself.
Yep.
And that's the benefit that people can get from that, is understand what your equity position is and then what options that may provide to you that you possibly haven't thought of previously. And in a lot of cases, people are, if they've owned their property for, a few years plus, in a lot of cases, they can be in a better position than they maybe think they are.
Yeah, absolutely. I find from a lot of instances, people find they don't know what they don't know. Like I tell anybody who listens, like there's no way I'm going to start learning what they do for a job in half an hour, right? So like I'm good in my little corner of the world here in terms of what I do.
We all
Yeah, correct. Like I guess we've been doing it for like 20 years, so we've gotten pretty good at what we do, right? So I guess like all real estate agents aren't the same. No two brokers are the same, right? So we've got the experience and the time mark. We've seen some stuff over our time, and we can make advice based on circumstances behind exactly what a customer brings into me based on our experience as well. So there's plenty of real estate agents, plenty of brokers out there, but who can you find that you genuinely trust off the back of, I guess, their experience, their Google reviews, I guess what they've had with word of mouth in the past as well. Like there's a lot of people saying, hey, I can do that too, but do you know what they can really do?
Yeah.
So to us, it's not so much trying to say bank versus broker at this stage. It's more so just saying, hey, there's 30, 40 other brokers just in this suburb alone.
Yeah.
But like, who can you truly trust as being the best one? And like, I'll hand on heart, put my hand up and say, look, we've got the runs on the board here, and we've got the experience and the knowledge, and we've got a lot of positive feedback from our communities to be able to assist you.
Yeah. Well, look, certainly in the experience that we've had together, there's been plenty of occasions where you've been able to make it an easy process for the buyers that we've had to be able to get into the home that they're after. In some cases, it's made all the difference of them being able to get the home that they really wanted versus not. So
so it definitely helps with figuring out for you from your side as well. I guess it does help vet in terms of buyers to figure out what people can actually borrow instead of what they think they can do based on calculators and things like that. So it makes them better to be able to go to yourself and say, hey, what can I go to here?
Yeah.
So we're happy to assist with any part of that process.
Yeah. Always, it's the same old story. It's the old cliche is knowledge is power.
Correct.
But that it's that people say that for a reason, isn't it? That if you go and explore these things before you get to that point, then you put yourself in a position where you're better armed to be able to go in, whether it's going to open homes this weekend to look at making an offer on something, thinking about selling your own property, buying an investment property. It all starts with having a quality conversation with someone like myself or yourself.
Correct.
Understand their position, and
same as what we do with our business as well. Like what customers should do is they should build out their own team of experts they can trust, right? So like you said, like find the right agents to help try and vet the right price brackets of what they might know coming to market. Find a conveyancer when the time comes to be ready. You've got your building press person. You've got maybe if you need to seek further investments, a financial advisor or accountant or something like that. And absolutely make sure you got the right broker in your corner.
Yeah, absolutely. Yeah. All right, hey, that's probably enough for one sitting for anyone that's viewing. Thanks for watching. If you're looking for any assistance in lending matters, Dan Brown, Loan Market. I'm Josh Smith, I sell houses, and together we can certainly assist you with whatever it is that you're looking to try and do.
Look, thanks so much for having me, and look forward to working with you in future.
Let's do it again sometime.
Thank you.
Thanks for watching.
Camera one.
Bye.
Thank you, camera two. Thank you.